Do you currently have credit card debt? Are you trying to pay it down, but it seems like somehow you just keep getting deeper into debt? Throughout our many years in banking, we've worked with a lot of clients in the same situation. So today, we're going to discuss the best options for paying down credit card debt. First, we'll talk about why a balance transfer is one of the best weapons in a war on debt. Hello everyone, this is Lewis with HeroBanker.com, and we're your friendly neighborhood bankers. Debt comes in all forms and sizes. Some debt, like a mortgage or a car loan, can be beneficial. But other debt, like credit card debt, can feel like a huge weight on your shoulders. This is especially true if you're only making the minimum payments and the amount that you owe is going up instead of down. So, if you'd like to find out the best options for dealing with credit card debt, let's get started. Option number one is a credit card balance transfer. With a balance transfer, you'll be taking the total amount that you owe and moving that balance over to another credit card with a lower interest rate. The reason why this is beneficial would best be explained with an example. Sally currently has a credit card with ABC Bank. Her balance on that credit card is $10,000, and the interest rate that she's paying is 20%. This means that every year, Sally will incur about $2,000 in interest charges on that card. Now, this doesn't necessarily mean that Sally will pay $2,000 in interest charges for the year. Because if Sally is only making the minimum payments every month, then she's not even paying down what she owes. So, in this case, Sally's total debt would be going up instead of down. This is a major factor in how many people end up down the rabbit hole of credit card debt. We highly advise against making minimum payments when possible. Now, obviously, things happen and sometimes the only option is to make the minimum payment. But if this is the case, then we need to understand that paying high interest on a credit card is probably not the best way to handle our debt in the long term. So, what do? Well, this is where a balance transfer can help. Remember, Sally has a credit card with ABC Bank. She currently owes $10,000 on that card, and she's paying an interest rate of 20%. Thankfully, Sally comes across a balance transfer credit card from XYZ Bank. XYZ Bank is offering Sally a new credit card. This card comes with an offer of 0% APR for 12 months on balance transfers. So, if Sally accepts this offer, this means that she's opening a new credit card with XYZ Bank with a 0% interest rate for 12 months. The $10,000 credit card balance that is currently with ABC Bank can now be transferred to XYZ Bank at a much lower interest rate. So, instead of paying 20% on her old credit card, she now has 12 months of 0% on the new credit card. Remember, Sally would have incurred about $2,000 in interest if she had continued to pay 20% on her prior card. But with this new card, she'll pay $0 in interest for 12 months, because for 12 months, her APR is 0%. Paying $0 instead of $2,000 over the same amount of time sounds too good to be true, right? And this is why a balance transfer can be a very valuable tool in your financial toolbox. When used properly, a balance transfer can save you hundreds, if not thousands of dollars. And because you're not paying interest during the promotional time frame, this makes it easier to actually pay down your debt. Now, the new credit card will most likely charge what's called a balance transfer fee. This means that you'll pay a small fee in order to process the balance transfer. Some of you may be thinking, I knew there was a catch. Well, not really, because the typical balance transfer fee is only 3 to 5%. So let's do the math on that. Remember, in 1 year, Sally would have incurred $2,000 in interest on her prior card. But a 3% balance transfer fee on a $10,000 transfer is only $300. So, over a 1 year period, Sally would save about $1,700 by doing a balance transfer. And that is the power of a balance transfer. A balance transfer can also be used to pay off multiple credit cards, not just one. So if you owe money on 3 cards, you can do a balance transfer for each card. This will consolidate all 3 of those cards into one. Most balance transfers will also allow you to transfer other debts, like a personal loan as well. So it's usually not limited to just credit card debt. One final note on balance transfers is that sometimes they can be done on your existing credit cards. So if you have money available on a credit card, then your card provider may reach out to you with a 0% APR balance transfer offer. These are sometimes sent to you via postal mail and email. If you'd like more info about balance transfers and interest on credit cards, check out herobanker.com. We've included links to these pages in the video description. Also, if you're enjoying the content, we would greatly appreciate it if you could hit that subscribe button. That way, we can keep you updated on banking, finance, the economy, and more. Thank you again for taking time out of your day so that we can help you become your own financial hero. We hope to see you again soon. If you'd like to see more content like this, we would greatly appreciate a like and subscribe. Thank you.